Hello everyone. Today we will discuss the remaining basic concept like the liabilities, expenses, expenditure, revenue. Okay. So what is the first one? That is the first one, liabilities. Liabilities are the obligations or the debts that enterprises has to pay at the sometimes in the future. It means the money whatever we are paid to the people. It means here in our business whenever there is a requirement of a fund, that time we are going to borrow the money. From where we are borrowing? Either we are borrowing from the bank, either we can borrow from the money lender. So like this we are going to borrow the money from the outside people. Okay, that whatever the money we have borrowed already for the business, that we want to be repay to the a person. Take example, if you borrow the money from your friend, that you want to be repay that your friend in a particular time. Same as it is, liabilities means it is a obligation or your responsibility or your debt that you want to be repay that person in a particular period. Okay, so it is having the some types of the liabilities, that is a current liabilities and non current liabilities. Current liabilities are those which are payable within a 1 year, that is called as the liabilities, current liabilities. Okay, so current liabilities means the money which you want to be repay within 1 year, that is called as the current liabilities. Opposite to that, that is non current liabilities. Non current liabilities are those which are repaid more than 1 year, that's called as the non current liabilities. That may be a long term provisions, long term debts, long term loan. Okay, so current liabilities are having example creditor, trade payables, okay, or bank overdraft, that come under the current liabilities. But non current liabilities are paid more than 1 year, that may be a long term provisions or a long term debts. Okay, so let's move for the next, that is called as a expenditure. Expenditure are the spending a money or incurring a liability for some benefits or the services. Okay, so it means services or the properties received is called as a expenditure. See here, expenditure means these are the money we are spending or incurring to purchase any property or to get some services, that are called as the expenditure. And remember, these are the expenditure made in a irregular basis. It means more than 1 year we are going to pay. Take example, monthly you are not going to purchase any building, you are not purchasing any furniture or a machinery, irregular you are purchasing. So it is expenditures means we are going to spend or incur the money to get some properties or to get some services or to get some benefits. That may be a purchase of goods, purchase of furniture, machinery. These are come under the expenditure. And we are having another one, that is expenses. Expenses are incurred by the business in the process of earning a revenue, are known as the expenses. That is not there in a display, but I have given a note that in that is there, that is the expenses. Expenses are incurred by the business in the process of earning a revenue. It means whenever you want to be earn a revenue, that time you want to be made, these are the expenses. What are the expenses? That may be a monthly you are paid the light bill, you are paying the water bill, rent, salary, whatever the spending you have made, no, that are called as a expenses. Okay, next we will move for the types of expenditure. There is a two types, that is revenue expenses and a capital expenditure. See here, revenue expenses and capital expenditure. So what is the revenue expenses? These are the expenses which incurred on a regular basis, are called as a revenue expenses. Revenue expenses are those which are incurred in the regularly. That may be rent paid, salary paid. These are come under the revenue expenses. Next, capital expenditure. Capital expenditure are those which are incurred irregularly. It means regular we are not paid. These are the money that are called as the capital expenditure. So capital expenditures are paid irregular basis, that are called as the capital expenditures. That may be a purchase of machinery, purchase of furniture, that are come under the capital expenditure. Once again I will repeat, that is revenue expenses and capital expenditure. See here, capital expenditure is nothing but expenditure. Revenue expense is nothing but expenses. Okay. Next we are having a profit and gain. Profit is the excess of or revenues of a period even relating to the expenses during a accounting year. It means whatever the investment you have made, no excess of that, if you are going to get the money or excess of your expenditures, means we are going to have a less expenses but more returns. It means whatever the investment you have done, no, we are going to get the more returns, that is called as a profit. Take example, you have invested 100 rupees, you are going to get a back of 110, then it's called as a, at that 10 rupees is called as profit. Okay. Next, gain. Gain, a profit that arises from an event or as a transaction which has incidental to the business. It means it is the gain we cannot be, the gain cannot be repeated, it is incidental, means sometimes we are going to get the gains. That may be say, whenever you are sold the property, that time you are going to get a again. Take example, you have purchased one building in a 2000, in the year of 2000 you have purchased the one building cost of 10 lakh, but now you have selling that in a 2020. So what the price you are going to get, that is more than 10 lakh, that it may be a 12 lakh, 13 lakh. So whatever the excess amount you are going to get, that is called as a gain. Or if you are going to win the any court cases, that time you are going to get the gains. Okay. Next we are having the losses. What is a loss? Loss is the excess of expenses of a period over it's related to the revenue. It's termed as a loss. It means whatever the expenses you have made, that is excess to the income. It means income less, expenditure more. That time you are going to get the losses. That is called as a cash. That may be a equity, it incurred its owner's equity money worth of without receiving any benefit in the returns. It means whatever the investment he have made, no, in that they are not going to get any returns. Returns is less and the expenditure is more. That is called as a losses. Okay. So what is that? That is if any theft occurs, okay, or a fire or accident, these are come under the losses. Next we are having a concept that is called as a discount. Discount is a deduction in the price of the goods sold. Okay. So whenever you are selling any goods at a lesser prices, take example 100 rupees is the textbook price, but we have sold that 90 rupees. It means a discount we have given to the a purchaser or a customer. Why we are providing a discount? To increase the sales. That is called as a discount. Okay. Next, in a discount we are having a two ways, that is a trade discount and the cash discount. What are the types? Trade discount and the cash discount. Trade discount is offered um, Trade discount is offering deduction of the agreed percentage. It means some percentage we are going to provide as a discount. And remember, this discount is given by the manufacturer to the wholesaler and the retailer to increase their sales. See here, the trade discount is the discount provided some agreed percentage. It means some percentage they have given the a deduction or the reduction, that is called as a trade discount. So trade discount is provided by the a manufacturer to wholesaler and retailer. Why they have provided? To increase their sales. Okay. Next, we are having a cash discount. Okay, so this cash discount is given by the creditor to the debitor, because whatever the money they have received. See here, if you have sold the any goods on the basis of credits, if they return back that money within a period, then we are provided the a cash discount. Take example, there is a two person A and B. A is having a business called a cloth business, and B has purchased the 10 shirts in his shop on a basis of credit. That time what the A says to the B, if you return that money within a 10 days, then I will provide 100 rupees discount. It means 100 rupees less amount you want to be paid to the A. It means 100 rupees benefit is received by the B, and that benefit is given by the A. What it means, whenever we are providing any discount on the basis of credit, then it's called as the cash discount. Cash discount is given by the creditor to the debitor. Okay. Next, we are having vouchers. The voucher is a one of a document. It is one of a evidence. Why it is used? It is used in the time of, voucher is used in the time of any transaction or any purchase of products. Take example, if you have purchased the goods, that time they have provided the receipts, that is cash memo or the receipts they have provided, that is called as the vouchers. Okay, and voucher is called as a document. Next, we are having the goods. It refers to the a product in which the business unit is dealing, or anything which we sell in the market. It means the products or the things which we are going to sell in the market, that is called as the goods. Goods are the things. Goods are the things whichever we have sold in a market, that is called as the goods. That may be a book, pen, anything. Whatever we have selling in the market, that is called as a goods. Next, we are having a drawing. A drawing means money or a goods withdrawn by the proprietor in the business for the personal use is called as a drawing. Drawings means money withdrawn or the things you have withdrawn from the business. Why we are using that money? We have used for our personal use. If you use it in the business, then it is not called as a drawing. If you have withdrawn that money for your personal use, then it's called as the drawings. Okay. Next, we are having a purchases. See, a purchases means purchases are the total amounts of goods purchased by the business on a credit or the cash basis. Okay, so purchases means purchases are the things you have bought, a total amount of a product whichever you have purchased, or the goods purchased on the basis of cash or credit. If you have purchased the goods on a credit, then it called as a credit purchase. If you have purchased on a cash basis, then it called as a cash purchases. Okay. Next, we are having a stock. Stock is a measure of the something on a hand, goods spent, and the other items in the business. It is called as a stock. It means unsold product. The whatever the products we are having, if it's not sold in the year, then it's called as a unsold. The whatever the unsold goods we are having, that is called as the stock. Okay. Next, we are having a debitor, creditor, revenues, expenses. Okay, so debitor are the person and the other entities, owners to an enterprises, an amount for the buying goods and services. It means the debitor are a person who owes to an enterprises. It means the person who has received the money from the other party, that time he is called as a debitor. Take an example. There is a two person, that is Pooja and Deepa. Pooja is paid 10,000 rupees to Deepa. In this situation, a person who pays the money, who is paying here? Who is paying? Pooja is paying. The person who pays the money, they called as the creditor. It means the person who receives the money, they called as a debitor. It means the person who owes the money, they are called as the debitor, and the person who pays the money, they called as the creditor. Okay, so creditors are the person and the other entity who has been paid by the enterprises an amount for the providing the enterprises goods and the services on a credit. So see here what happens. The person who pays the money to the person, they called as the creditors. Okay, next we are having revenues. These are the amount earned by the seller by selling a product and providing a services to the customer are called as the revenues. Revenues means the money which we incur by selling or providing any services. On that, if you have received any money or the any income, that's called as a revenue. Revenue is nothing but income. That may be interest received, commission received. You have deposited the money, to that they have provided the interest, that called as the interest received, commission received. These are called as the incomes. Okay, or the revenues. Next we are having the expenses. The cost incurred by the business in the process of earning a revenue are called as the expenses. Expenses means the money which we spend to earn that revenue, that's called as expenses. Already I have explained, but once again I am explaining. I expenses, that may be a salary paid, rent paid, water bill paid, anything whatever you have paid, that's called as the expenses. Okay, so these are the basic concepts, and these are the basic concepts were used in the time of preparation of accounts. Okay, so thank you one and all.